Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test the numerous targets located by recent groundwork will commence later this year. Please visit our website at rmroyalty.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard. My guest is Ted Dixon, CEO and co-founder of InkResearch.ca, Canada's first online financial news and research service, providing insider news and knowledge to investors. Welcome back to the show, Ted.
Oh, it's great to be back, Jim.
The IMF has upped Canada's economic growth projection from 2.5% to 3%. Is that an honest projection?
Well, I think it's a recognition that the IMF, like a number of mainstream forecasters, were behind the curve on the outlook for Canada at the beginning of the year, and they're playing some catch-up. And I think at this point, the stock market is also catching up to some of the fundamentals in Canada. The question going forward is, can Canada keep the momentum going? And, I think there's two aspects to that question, Jim. I think there's a question for investors as it relates to the stock market, and then the broader economy. Can the broader economy keep the momentum going? I think the answer is yes for both. But certainly our conviction level is a bit stronger on the stock market than it is for the overall Canadian economy. The two are not linked at the hip, although there is some correlation of sorts, of course. But in general, the Canadian market, stock market, also depends on what's going on in the rest of the world. And the rest of the world, growth is looking okay. And, we'll have to see what happens in Canada. But in general, things are looking up. I just said there's a little bit more risk now around the Canadian economy than there was at the beginning of the year. So it is kind of ironic now that you have the IMF kind of catching up to things just as the risk starts to increase here on the Canadian economic side.
What about on the real estate front? Some of the people I've interviewed had said because of the stiffer rules brought in by CMHC and so on, the rules themselves could cause a massive slowdown in Canadian real estate and cause a recession simply because the value of real estate falls so much because of these new rules that supposedly were being brought in to prevent a housing-caused recession.
Okay, well, that is one of the risks that has confronted the Canadian economy for a very long time. So, there's two aspects to this as well in terms of investors. Are you a real estate investor or are you a stock market investor? And, if you own your own home because you live in it, you shouldn't really be too concerned about the value, whether it goes up and down, month to month or year to year. If you're kind of just in the middle of your life, sort of raising a family and not expecting to move, that's not really going to impact you. I mean, if you're in the business of real estate speculation, well, then that's a different story. And what we've had here is a reaction by the Trudeau government to the housing bubble in Toronto, and they've clamped down on it. And so far, it has had the intended effect in Toronto, not so much here in Vancouver. So we'll have to see how it plays out. The death of the Canadian housing industry, real estate industry, has been forecast for many, many years. One day it will slow down. It has slowed down in Toronto for sure. If people are listening from Toronto, I'm like, what are you talking about? Of course it slowed down. But in Vancouver, as you know, Jim, it has not slowed down. It's still going gangbusters. Although it's just shifted from the condos, from the single-family homes. But we'll have to see. But the stock market is a completely different story.
We'll have more with Ted Dixon right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN AF. surrounded by world-class gold deposits and mines. Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're chatting with Ted Dixon. Ted, how has your insider index been doing the past while?
Well, the Canadian Insider Index is a mid-cap oriented index. So it's 50 stocks listed on the Toronto Stock Exchange that are preferred by insiders. And we sent out a note to our clients at the beginning of October saying the Canadian Insider Index hits a new all-time high. You know, what's next? And basically, we started off October at a brand new all-time high. We've led the S&P TSX Composite, which has not hit an all-time high recently. So we've been leading that, and there's reasons. The reasons are as our index is structured differently than the TSX Composite, which looks at the biggest stocks in the Canadian market, and we look at stocks that are preferred by insiders. Insiders are leading the charge here. Now, we came to the conclusion that based off of the momentum we see in the Canadian and global economy, and what insiders were signaling to us is that there's more room to run on the Canadian stock market. And so far, that's worked out. This week we've had a number of new all-time highs. We didn't have one on Thursday, but we had one on Wednesday. And you know, we've got some momentum behind us in the Canadian market. And in the report, what we mention is that, what we look at is, well, what's been leading the charge here in Canada, in the Canadian stock market? Well, when you look at who's been the big winners, what it turns out is you've got mining, you've got Hudson's Bay Minerals is the top performer since our May rebalancing. You've got a company called BRP, which is the Skidoo maker, which is the second most highest returning stock in the index. Now, and they sell over 80% of their goods globally. They've had they've been experiencing really good growth in Europe and Asia. And Canfor, it was the third top performer. And you know, there we've got a very, very interesting situation, Jim, where lumber is hitting, you know, decade highs. And part of that is a self-inflicted wound in America where they've done this trade tariff protectionist thing on Canadian lumber. We've taken our lumps, but you know what? That's the workers, unfortunately, in Canada taking our lumps. Canfor stock is soaring. And guess what else is soaring? The price of lumber. And who is that hurting? Well, that's hurting American families. So, you know, we can only hope that in the United States that Americans will wake up to the fact that, you know, this kind of trade protectionism isn't working out so well. But in the meantime, you know, the lumber prices are soaring, and that's helping to offset some of the negative impact that companies like Canfor, you know, are obviously experiencing from that from those tariffs that the Americans are putting on. But when you have lumber soaring to 10-year highs, it's completely defeating the purpose of what the Americans are trying to do. So anyway, we've got a number of drivers in the Canadian stock market, you know, outside of the energy space and outside of the banking space, you know, which are more domestically focused. So even if the Canadian economy does kind of slow down its growth here, there's still other aspects of the Canadian market that could do quite well if global growth keeps ticking along.
Well, even with high prices, will there be any lumber considering an area larger than Prince Edward Island burned in British Columbia this summer?
Well, sure. I mean, there's we have our challenges on the supply side in British Columbia, but these forest companies, the larger ones, have multiple properties and assets around North America. Some are more diversified into the United States and others. Others, some are more concentrated on the coastal areas. So, you do have a diversified mix. You never want to just hold one company. Currently in the Canadian Sector Index, we have 3 forest companies. We also have West Fraser Timber and Interfor, and and they have very different profiles in terms of their assets. So we'll have to see, of course, if the U.S. economy takes a bit of a dive, then that would be a bad sign. But so far, they're managing to hang in there, and you've got a Congress that's a Republican Party, I should say, and a president that seem to be determined to cut taxes now, even if it means increasing the deficit. So we'll have to see how the details play out on that. But that could also be very positive for certain Canadian companies that make things like skidoos or whatever, that go into the American market, provided there's no trade war. Tariff walls don't go flying up. If Americans are going to have more disposable income, that's going to help those companies, and it's going to help, if people can still afford to buy homes and build homes and replace homes that have been damaged by hurricanes, that's going to help forestry companies. And that's before you even get to the growth story in Asia. So your listeners can go to CanadianInsider.com and download that report. It's free. It's available on our free download section. We put it out. The date was October 2nd. Was the date of the report, and it's now on the Canadian Insider site for free. So you can take a look at it and see our views at the beginning of October. And so far, it's played out all right. It's got to keep our fingers crossed, of course, that there's no major policy blunders of wars that start out of Washington, because then that's definitely the biggest risk to the outlook.
We'll have more with Ted Dixon right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, what's your impression on what's happening with the NAFTA negotiations?
Well, everyone's trying to figure out what's going on, and my best guess is that Trump is really trying to set the negotiating stage to his advantage, and he's trying to psych people out, and he's talking about ripping up NAFTA, and I don't think that's a high probability outcome, but it's possible. I think it's possible with him. He did rip up the TPP, and he did pull out of the Paris Accord, kind of. I mean, sometimes it comes back to, they haven't really pulled out of it. But in any event, could he pull out of NAFTA? He would, but the stakes are much higher to pull out of NAFTA than they are for those other 2 agreements. The TPP hadn't started yet, so it was just sunk costs, sunk cost meaning all the time that all those countries, including America, had put into negotiating it. That was down the drain. Okay, but it wasn't. No one had. Except for bureaucrats, no one had their jobs based off of it. But and greenhouse gas, it's a broader issue, but it didn't have the same kind of. It was much newer, so it hasn't been ingrained in U.S. economy as much as NAFTA. I mean, NAFTA would be a big deal even for the Americans to pull out. Yes, it would hurt Canada and Mexico more. But, the Americans are going to have to really compensate a lot of people, and especially in the agriculture area, if they pull out. And, I don't know where they're going to get the money for it if they're going to spend all their money on tax breaks. So we'll have to see. It won't be easy. I think that at the end of the day, they'll get a deal done. The market's telling me that it is Linamar, which is an auto parts maker is one of our top-ranked stocks in our Inc. Top 40 report. That's not a stock recommendation. It's just a fact that it came in top on our top 40 list, and and it really started to move in terms of its price momentum once NAFTA negotiations started. Now, it fell on Thursday with some negative NAFTA chatter. So maybe it's going to take a breather here. Maybe susceptible to some headline risk. But in general, I think the market's still expecting that we're going to get a deal. But hey, we're dealing with Donald Trump, and he's, maybe NAFTA will be his third deal he rips up. We'll really have to see. Maybe he'll rip up the Iran nuclear deal and get it all out of his system. We can only hope. That would be sooner. So because that one's coming up this month, I believe. So why not? Hopefully he'll go and vent his Obama agreement frustrations on the Iran deal, although the NAFTA was done well before Obama. But in any event, we'll just have to see how it pulls out. But so far, yeah, it's a risk, Jim. But right now the market's trying to see through this, and the last time I checked, a lot of these Canadian auto companies, since the Great Recession, most of their investments have been outside of Canada, and just diversifying their exposure. So some of those investments have been in the U.S. and I'm not talking about any company in particular here. Some have been in Mexico for sure, but other places are like Europe and China. So once the dust settles, if there is a NAFTA temper tantrum by the White House, and then the deal gets thrown out and these stocks fall off, it would likely present a buying opportunity.
What's your impression of the Trudeau government's tax reform so far? It looks like they want to go after minimum wage workers who might get a free cup of coffee from their employer if they're people who work for a coffee shop, or middle-class small business owners. I've heard from doctors who say they're seriously looking at moving to the States if they're going to be taxed to death in Canada.
Well, look, this is one of the big risks to the Canadian outlook, both to the market, to the stock market, and even the housing market for that matter. If the Trudeau government continues on, I don't call it tax reform, I call it tax increases. If he were reforming the tax system, Jim, he'd be saying, okay, we see there's problems over here. We're going to increase the tax burden on these people, and we're going to lower it somewhere else. That would be reform, okay? It's not reform. It's an increase, okay? Same with this ridiculous idea to start taxing, the differences between a free teen burger, not a free, a discounted teen burger if you work at, I don't know, maybe Indelli doesn't give teen burgers out to their staff. But you know what I mean? Like, you're getting a pair of jeans at whatever percent off. And you're going to tax these people, and you're going to ask the employer to keep track of all this. I can tell you what employers are going to do. They're just going to say, we're not going to do this anymore because it's just too hard to keep track of. We don't need Revenue Canada coming down, breathing down our necks, and these things will be gone. So the Trudeau government has really kind of shot itself in the foot, and it's as we've talked about this, they're putting their own economic track record at risk. The Canadian economy is doing quite well. Part of it is due to their what I would say tax changes, when they first came in, which were fair enough. I didn't agree with all of them, but they made some sense. They weren't just a pure tax grab. If anything, they were a tax cut on net. But now they're just going in the opposite direction, and they're going after honest people who file their taxes, and because they want to squeeze more out of them. Well, that's just going to slow the economy down. And, that is a big risk to the Canadian economy. So I assume they're going to get their act together and give their heads a shake. But, I've seen lots of politicians walk themselves into political defeat and denial. They go hand in hand.
The Bank of Canada said there's a mysterious lack of new business development in Canada. Do you have any clues to what could solve that mystery for them?
Well, I was listening to the interview you did with Danielle Park, and I have to agree how she, her assessment on that. I think there's, I would encourage your listeners, if they haven't listened to that, to listen to it. But, I think it's very hard right now, for, people to quit their jobs and roll the dice and take out a second mortgage on their home, or as many people, right, as there were. Particularly if you were in Toronto and you just bought your house last year, unfortunately, you're not going to have any equity in that purchase for a while to do any home equity withdrawals to start a business. But in any event, I think Danielle is right, that the trend has been to use home equity as an ATM to service lifestyle, not to start with small businesses, because incomes haven't been growing that strongly in Canada. And that's what we saw in the United States leading up to the crash in 2007. Hopefully it's not going on as much here as it was then, but you only find that out after the fact. And I think that's part of the problem, So the Trudeau government's not doing anything to address that. If anything, they're going to make it worse. And I really hope they give their heads a shake. I'd be. And if Trudeau were smart, he would change his finance minister. Maybe we can do a show on the reasons why. But I think Bill Morneau has just had too many strikes here, and it's time to bring in a new hitter in the finance ministry. If the Liberals want to win the next election, and if it's their political decision if they want to stick with their plans, we'll just have to tough it out with them, and we'll see what happens. But they've really managed to maneuver themselves into a political corner all by themselves.
Bill Morneau, the finance minister, has said there will be no unintended consequences from his tax changes. In other words, whatever happens, they fully intended to happen. Isn't that what that means?
Well, then I hope he explained that to the BC caucus of the Liberal Party, because I can tell you that every single one of them is going to lose in the next election if they proceed on this track, because people are going to wonder why they're going after honest Canadians who pay their taxes and not being seen to do very much on money laundering and tax evasion, right? I mean, people are just wondering, what's going on here? How come you're going after the Canadians, and yet, we see all these stories in the paper about people who don't pay their taxes, and, how come you're not going after them? And, people, figure that part out. And unfortunately, it looks like the Liberals in Ottawa are the last to figure that out. And so, maybe he's planning. Maybe he doesn't like. Maybe he doesn't like his colleagues from British Columbia, in the Lower Mainland. Maybe this is part of his plan to get rid of people he doesn't like in his caucus. I don't know. I mean, I'm being very cynical there when I say that, but. Every single Liberal seat is at risk in the next election. If they don't believe that, I've seen politicians go in denial, and the voters will have their say. But I'd be surprised if they don't have a change of tune, not just a change of policy, but a change of tune. Jim, I was sitting in a coffee shop just this week, and the story broke about the taxing the retail workers. These two guys were having their coffee, and they were joking. They said, well, everybody's got to pay their fair share, and so when you become kind of the jokes around the coffee table, you got a big problem. And that may not show up in your focus groups and your polling until it's too late.
Well, of course, like I said, if you work at a coffee shop, one of the perks of working there, because you're getting minimum wages, you might get a bag of coffee a week. Or if you work at Best Buy, you might get a discount on electronics, but you're certainly not getting a big wage to work at those places.
And, and the discount, how many of those can you consume right now? Maybe if you're Best Buy, you've got your own business on whatever, I don't know. But generally, these are just little things, right? And the culture that they've instilled, that they're even considering this, tells you all you need to know, right? And that they thought that this was fair game. This is their mindset, okay? Bill Morneau and Justin Trudeau have never had to worry about meeting a payroll. They've never had to probably worry about paying their bills. And, they just don't get it. And that's why Justin Trudeau, as a leader of the Liberal Party, has to shake things up. And if he doesn't, the voters will shake things up for him. And, all the conservatives have to do is not say anything stupid, and all they got to do is just hold them accountable for all these crazy ideas, and the conservatives have a chance of winning again. And I don't believe, I did not believe that when Andrew Scheer got elected as a Tory leader. I thought, well, that's it, 4 more years of Liberal government. And, I take that back. Justin Trudeau is going to be lucky if he can pull a minority off the way he's going. So we'll have to see. But they are in power for another 2 years or so. They have time to reset and it'll be good for the economy. I just really worry that if they dig in their heels and they keep on with this rhetoric that everybody's got to pay their fair share, which now is code for taxing people wherever they can. It's going to put a damper on business investment, particularly among small business. Small business has been hurt by this. It's been hurt. The sentiment's been hurt. And what really concerns me is Justin Trudeau and his finance minister don't seem to get that. And that's real. Every government has its challenges after it's been in power for a long time. I would argue it happened to the Harper government in its later years. But this government's only been in power for 2 years, Jim. It's too early. It's too early too early for this to be a fact. To see this onset so soon. It's kind of sad. Because the government has accomplished some good things as well. And I continue to be astonished at the damage they've done to themselves just over the past 2 months, and the damage they're starting to do in the Canadian economy by damaging small business sentiment. So I really hope they turn things around. We want to see a strong economy. I'd like to see Justin Trudeau get his brand back and not see him having it self-inflicted brand damage. Where he was really, I think, admired globally and helping to build the Canadian brand globally again. And it would just be a real shame, I think, in some sense to see this deteriorate. But that these are his choices, these are his values. Then we're seeing the real person, and Canadians, I don't think, are going to like what they're seeing right now.
How is Vancouver shaping up on the high tech front?
Well, there was an interesting report in the summer by CBRE that ranked the 50 cities globally on high-tech workers. I just came across this the other day thanks to the CanTech letter, which is a great letter published locally here. That's about the Canadian tech scene, and you can Google it if you've never taken a look at it. But basically, they found that Vancouver ranked above median, middle of the pack, the 16th out of 50, which is pretty good, based off of 13 different criteria. But what really struck out, Jim, is that they had the lowest wages. Vancouver tech workers have the lowest wages, and we have the highest housing. And, that is just not sustainable. Highest housing costs, and there's no way you can continue to build a high-tech structure with those two opposite dynamics. And you know what? The NDP is going about it the wrong way. They're increasing taxes on higher paid workers, but you need those higher paid skilled workers to be leaders in these companies. And otherwise you're just going to have branch plant high tech companies, and then you're going to offer them tax credits. You're never going to have a sustainable nucleus of homegrown talent to really build a muscular high-tech center. So it's discouraging, and it's discouraging that the new NDP government is dragging its feet on the housing file. A lot of people are wondering what's taking them so long. When they were in opposition, they had all the answers, and now they seem to be, I don't know if they've just been overwhelmed by the problem, or whether they're just showing signs of incompetence, or a combination of both. But they just don't seem to be able to know what to do about it, and that's probably coming as a shock to a number of their supporters. But we'll have to see. They haven't had a full budget yet, and maybe by the time the budget rolls around, they may have some concrete measures in place. But we can do a whole show on that as well. And it's just unfortunate that Canada's got a great workforce, and we talk about this on the show a lot, and it's one of the fundamental pillars of our economy. David Rosenberg had a nice piece in the Globe and Mail about the pros and cons of the Canadian economy just this week in the Globe and Mail, and worth reading. And the workforce is right up there. Unfortunately, we have lackluster public policy, and we can do so much better. And I just don't understand why the political class in this country cannot rise to the challenge. They just have not.
Ted, thank you so much for chatting with us.
Well, thanks for having me back, Jim.
My guest has been Ted Dixon, CEO and co-founder of InkResearch.ca, his website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.